Workbook Solutions Chapter 2. This video corresponds with Video 3, Double Entry Accounting, from my lecture series. Without further ado, let's look at some problems. Let's start with the example on page 8 regarding how to post entries to T accounts. Mike Chapman decided to start a business as a disc jockey for wedding receptions, reunions, and other parties. His business is called Listen Up. Record the following journal entries for Listen Up and post these entries to the appropriate T accounts. Note: based on the textbook, transaction A should probably be Mike invested $7,000 in cash in exchange for owner's equity, not common stock. This material covers the sole proprietorship format of a business. The accounting for the corporate entity will be addressed later. In either case, the first transaction is Mike investing $7,000 for equity in the company. Our journal entry is a debit to cash, increasing the business assets, and a credit to owner's capital, increasing equity. The debit to cash will be posted to the debit column of the cash T account, and the credit to owner's capital will be posted to the credit column of the owner's capital account. Remember, debit means left, and credit means right. So the debit and credit goes to the left and right columns of the respective T accounts. As I work through this problem, I want to show how each transaction impacts the accounting equation. Remember that the equation must always be balanced. The debits on the left side must reconcile to the sum of the credits on the right side of the equation. Right now, we have $7,000 of debits on the left side and $7,000 of credits on the right side. Transaction B. Mike, through the company, purchased $5,700 of stereo equipment on account. On account indicates that this transaction is a credit purchase, meaning we're not paying cash now. Rather, we'll owe the cash for a little while, then pay it later. Our journal entry consists of a debit to stereo equipment, increasing our assets, and a credit to accounts payable, increasing liabilities. The debit to stereo equipment goes to the debit column of the stereo equipment T account, and the credit to accounts payable goes in the credit column of the AP T account. Our accounting equation now has $12,700 in debits on the left side, which ties to the $7,000 credit in equity plus the $5,700 credit in liabilities. Transaction C. Mike paid for an advertisement in the local newspapers for $500. Whenever we consume a service from another party, we have an expense. So we'll debit advertising expense and credit cash. The debit to advertising expense goes to the left column of its T account, and the credit to cash goes to the right column of its T account. Total assets now has $12,200 in debits, and that debit to advertising expense decreases total equity to a $6,500 credit. Transaction D. Listen Up paid cash for supplies in the amount of $75. Remember, supplies is an asset that we've acquired, but not yet used. Effectively, all we've done is change the asset composition of the business, converting $75 of cash into $75 of company supplies. Our entry will be a debit to supplies and a credit to cash for $75. The debit to supplies goes to the left column of the supplies T account, and the credit to cash goes to the right column of the cash T account. That credit to cash reduces total assets to a $12,125 debit, but the debit to supplies increases it back to $12,200. Transaction E. Listen Up received $1,000 in cash from a customer for music provided at class reunions. Mike has performed the work to earn the money, which means he has a revenue. The entry will be a debit to cash for the cash received and a credit to fees earned to increase company equity. The debit to cash goes in the left column of its T account, and the credit to fees earned goes to the right column of the fees earned T account. Total assets increases to a $13,200 debit, and total equity increases to a $7,500 credit. Transaction F. Listen Up paid for the stereo equipment purchased in Transaction B. This transaction was the credit purchase in which we debited stereo equipment and credited accounts payable. We can see that debit and credit in their respective accounts. With this transaction, Listen Up is paying off the amount owed, so the entry will be a debit to accounts payable to reduce liabilities and a credit to cash for the cash disbursed to the vendor. The debit goes to the left column of the accounts payable T account, and the credit goes to the right column of the cash T account. That credit to cash reduces total assets to a $7,500 debit, and the debit to accounts payable reduces its balance to zero. Transaction G. Listen Up provided music at a wedding reception and billed the bride's father for $300. Here, Listen Up has performed the work to earn the money, but the money has not yet been received. Rather, it will be received in the near future. The journal entry will be a debit to accounts receivable to record the cash that Listen Up has a right to receive, and a credit to fees earned. The debit to AR goes in the left column of the ART account, and the credit goes to the right column of the fees earned T account. That debit will increase total assets to $7,800. Likewise, that credit will increase total equity to $7,800 as well. Transaction H. Listen Up paid wages to an assistant $150. Listen Up has consumed a service from its employee, so that's another expense to record. Debit wages expense and credit cash paid to the employee for $150. The debit to wages expense goes to the debit column of its T account, and the credit to cash goes to the credit column of its T account. Total assets decreases to a $7,650 debit, and total equity decreases to a $7,650 credit. Transaction I. Listen Up received cash from the customer billed in Transaction G. This transaction is the collection of the $300 receivable from the wedding reception. Our journal entry is a debit to cash for the cash being received, and a credit to AR for the satisfaction of the receivable. The debit to cash goes to the left column of the cash T account, and the credit to accounts receivable goes to the right column of its T account. The credit to AR reduces total assets to a $7,350 debit, but the debit to cash increases it back to a $7,650 debit. Finally, Transaction J. The owner withdrew $575 for personal use. Debit the drawings account and credit cash for $575. The debit will be posted to the left column of the owner's drawings account, and the credit will go to the right column of the cash account. That credit to cash decreases assets to a $7,075 debit, and the debit to drawings decreases equity's credit to the same amount. With all our entries posted, we now just determine the balances in the T accounts. Remember how balances are determined. Sum the amounts in the debit column, sum the amounts in the credit column, take the difference, and the side with the bigger sum shows that difference. As an example, the cash account has a total of $8,300 in debits and $7,000 in credits. The difference is $1,300. Since the debit column has the larger amount, this account has a debit balance. Obviously, the sum of all our account balances will match the totals of assets, liabilities, and equity. On page 9 of the workbook, you'll see how a ledger account is commonly presented in an accounting software system. I'd like to go over how these journal entry postings would be presented in just such a system. It provides the same information as a T account. In fact, it provides a little more information than a basic T account, but for the purposes of determining an account's balance, they're the same. Let's see how the items posted to the cash T account would be reflected in an actual ledger. Transaction A. The $7,000 debit to cash would go in the debit column of the cash T account, providing a $7,000 debit balance. In the ledger, we'd put the date of the transaction in the date column. Since this example doesn't give us actual dates, I'll simply put the transaction's letter here. In the item column, you could put a general description of the transaction. Don't worry about the posting reference column for now. That'll be clarified in a future lecture. The first debit and credit columns give us the amount debited or credited in the journal entry. The second debit and credit columns give us the running balance in the account. In other words, the $7,000 in the first debit column corresponds with this amount in the T account, and the $7,000 in the second debit column corresponds with the balance provided by the T account. Transaction C. Here we credited cash to pay for an advertising expense. If we were to tabulate the balance in the T account after each posting, we'd have a $6,500 debit balance. To show this information in the ledger in the bottom half of the screen, put a description in the item column, the $500 credit from the journal entry in the first credit column, and the debit column reduces by that credit to a $6,500 debit. Transaction D. We credited cash for $75. The T account's new balance would become a $6,425 debit. In the ledger, give a general description, put the credit from the journal entry in the first credit column, and the second debit column reduces further by that credit to $6,425. Transaction E. We debited cash for a collection of $1,000. The T account now has a debit balance of $7,425. If we were using a ledger, the $1,000 debit from the journal entry goes in the first debit column, and the second debit column increases to that $7,425 debit. Transaction F. We credited cash to pay off the liability for the stereo purchase. We see the $5,700 in the credit column, and the new debit balance becomes $1,725. In the ledger, the $5,700 from the journal entry goes in the first credit column, And the second debit column gives us our updated debit balance of $1,725. Transaction H. We credited cash to pay our assistant for $150. The new T account debit balance becomes $1,575. In the ledger, the credit from the journal entry goes in the first credit column, and the second debit column gives us the updated debit balance of $1,575. Transaction I. We debited cash for the $300 AR collection. The T account's new balance is a $1,875 debit. In the ledger, the $300 debit from the journal entry goes in the first debit column, and the second debit column gives us the updated balance. Finally, Transaction J. We credited cash for the withdrawal by the owner. The T account's new balance drops to a $1,300 debit. In the ledger, put the $575 in the first credit column, and the second debit column yields that $1,300 debit balance. Hopefully the system ledger is now decipherable. That said, whenever you work on a homework or a test problem and you need to calculate the balance in a particular account, drawing a T account is the simplest, most effective means of doing so. On page 12, let's identify the errors in the following information. We're also going to presume that the journal entries are 100% correct. So the easiest way to go about this is to start with our journal entries and trace them to the general ledger. So for starters, transaction A, we debited cash for $8,000. We see that in the cash account. We credited owner's capital for $8,000. We see it in OC. So that one's good. Transaction B, supplies got a debit for $200. We see that in supplies. And cash got a credit for $200, which checks off, so transaction B is good. Transaction C, cash got a debit for $550, and there it is. And fees earned got a credit for $550. So when we look over in fees earned, we see that we have a $500 credit. So let's go on and change that. Transaction D, wages expense got a $1340 debit. Cash got a $1340 credit. D is fine. And transaction E, AR got an $810 debit. And fees earned got an $810 credit. We look at fees earned and it's not there. But we see an $810 credit right up here in owner's capital. So we need to move that down to owner's capital. And fees earned now has a balance of $1,360. While we're at it, we can go on and change our owner's capital balance to the correct $8,000 credit. Next, we look at our trial balance. So the balances in our general ledger should tie to those in our trial balance. Starting with cash. The cash GL has a $1,300 debit, but the trial balance has it as $6,970, so we know something is wrong. The best thing to do here is to re-sum our cash GL balance. So cash has a total debit of $8,550. And a total credit of $1,540. So you take the difference between those two, and cash should have a debit balance of $7,010. So that's the balance we should have down here in our trial balance. Next, we look at accounts receivable, an $810 debit, and $810 debit. That one's good. Supplies has a 200 debit, which matches. Owner's Capital has an $8,000 credit, so we need to change that right there. And of course, fees earned had a 500 credit initially. On the trial balance, it's a $500 debit. That needs to be changed to the correct balance, and it needs to be a credit. And finally, wage expense, a 1340 debit matches a 1340 debit. Those corrections made, just resum the total debits and credits on our trial balance. So we'll have 9,360 debits and the exact same credits. So those equal, we're in balance, and we can be pretty confident that everything is correct. On page 13, let's go over how to book correcting entries. In other words, if we were to book an incorrect entry, how do we fix it? For example, a dividend of $6,000 paid by the company is recorded as a debit to office salaries expense and a credit to cash. Again, the corporate entity will be covered in a later chapter, so let's rephrase this example as follows. A drawing of $6,000 was taken out by the owner for personal use and was recorded as a debit to office salaries expense and a credit to cash. First off, let's determine the journal entry that was made, incorrect though it may be. We debited office salaries expense and credited cash for $6,000. What's the entry we should have made? Instead of debiting office salaries expense, we should have debited drawings. Everything else is the same. To further examine the impact of the error and how to correct it, look at the T accounts. Right now, office salaries expense has a $6,000 debit that it should not, and drawings has a $0 balance when it should have that $6,000 debit. To correct, we need to move that debit from office salaries expense to drawings. So we'll debit drawings and credit office salaries expense. This entry will put a $0 balance in office salaries expense and a $6,000 debit balance in drawings. Let's consider one more example for how to book a correcting entry. This method I'm about to show is an effective means of deciphering a correction whether the error is complicated or not. A utilities expense of $4,500 paid for the current month was recorded as a debit to miscellaneous expense and a credit to accounts payable. What was the incorrect journal entry that was actually made? Debit miscellaneous expense and credit AP for $4,500. What's the journal entry that should have been made? We should have debited utilities expense and credited cash. Again, we could examine the T accounts to see how to correct the errant entry. Miscellaneous expense has a $4,500 debit that should be 0, and AP has a $4,500 credit that should also be 0. Utilities expense and cash are both missing a $4,500 debit and credit respectively. The easiest way to fix this entry is to simply reverse the wrong entry, debiting accounts payable and crediting miscellaneous expense, which will zero out those two accounts. Next, record the correct entry, debit utilities expense, and credit cash, which puts the correct debit and credit in the correct T accounts. That's most everything in this chapter's section of the workbook. There are a few more problems I'd like you to try on your own if you do have the workbook. I'll make the solutions available online. If you don't have it because you're not in my class, I thank you for watching this video anyways. I hope it brought some clarification and understanding of the material. Please leave any questions or comments below. I'll see you next time.